Ladies and gentlemen, good day and welcome to the WPIL Ltd Q1 FY 26 earnings conference call hosted by Arihant Capital Markets Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ronak Oswal. Thank you and over to you, sir.
Hello and good evening to everyone. On behalf of Arihant Capital Markets Limited, I thank you all for joining into Q1 FY 26 earnings conference call of WPIL. Today from the management, we have Mr. Prakash Agrawal, sir, Managing Director of the company, Mr. Krishna Kumar Khandelwala, sir, Executive Director of the company. So without any further delay, I will now hand over the call to Mr. Prakash Agrawal, sir, for his opening remarks. Over to you, sir.
Thank you and good evening, everyone. It is a pleasure to welcome you all to our earnings conference call for the first quarter of financial year 2026. Let me first take you through the financial performance of the company, followed by the operational highlights. For the quarter under review, consolidated revenues from operations stood at 379 crores, an increase of 4% year-on-year. EBITDA was 49 crores, which declined by 18% year-on-year, with EBITDA margins for the quarter at 13%. Profit after tax amounted to 26 crores. On a standalone basis, revenues stood at 181 crores, a decline by 24% year-on-year, while EBITDA stood at 28 crores and EBITDA margins at 15.62%. Net profit stood at 19 crores. The product division maintained its growth momentum, delivering revenues of 65 crores compared to 55 crores in first quarter FY 25. We also achieved the highest ever product order booking in the first quarter of 139 crores, which has grown our order backlog to 411 crores. Product and market development continues to gain further momentum across all sectors. We're seeing a strong inquiry pipeline, especially in the power and irrigation sectors, and have received new orders from the Navy for new vessels, further expanding our product range in naval applications. The record order intake this quarter came across sectors with large orders in irrigation and port sector supported by international drainage orders. The domestic project business remained constrained due to sectoral challenges with revenues at 116 crores compared to 184 crores in Q1 FY 25. Our main focus remains on project completion, which is progressing well. On a positive note, 4 projects have started O&M this year and another 4 are expected to be commissioned by the end of the year. The payment situation is slowly improving and we expect improvement in the water sector in the second half of the year as the Jal Jeevan issues are resolved and fresh tenders are expected for both rural and urban water sectors. The international business. Revenues increased to 197 crores compared to 126 crores in Q1 FY 25, driven by the strength of our new acquisitions. Margins were affected by transactional and legacy costs in the first quarter, but are expected to improve and normalize through the year. Grupo Aturia and MISA are both operating with strong order books and expected to regain growth momentum this year. Grupo Aturia had a strong order intake in Q1, particularly from the irrigation and water sectors in the MENA region. It has also commissioned its large pump test facility during the quarter with supply of large flow pumps to the Italian government. WPIL South Africa has strengthened its position in the country's water sector, supplying the largest pumps for the Zokobosh pumping station. PCI Africa starts this year with a record order book with strong traction in the Eastern Cape wastewater sector and a robust pipeline across both water and wastewater segments. Eigenbau also begins the year with a strong order book and is expected to ramp up revenues supported by good orders from Nigeria. Meanwhile, MISA Italy has been working through legacy contracts and is now actively rebuilding client relationships, which augurs well for future growth. Sterling Pumps Australia operation remains stable with improving profitability, supported by higher margins and a better cost structure. Lastly, WPIL Thailand continues to expand in the large drainage sector, which is aligned with the Thai government's focus on this sector. Now I'd like to take your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Deepak Purswani from Swan Investments. Please proceed.
Yeah. Good evening, sir, and thank you for the opportunity. So firstly, wanted to check it out. You mentioned about the issue regarding the JJM has been resolved. If you can throw some more light in terms of how has been the payment processing at this point of time, and whether the receivable cycle has now normalized, and how is the billing is shaping up in these kind of project at the current juncture? And second part of the question is on the opportunity pipeline, which you you also mentioned that there is an encouraging pipeline for these projects. If you can give broader sense on that part as well, that would be really helpful. That is my first question.
So, regarding the JJM projects are being reviewed in the first quarter. Since the budget announcement, the government set up a committee to review the JJM schemes and future financing. Apparently, the review has been conducted and the final report submitted, and we expect a clear direction going forward. But I think it will be on a positive note, and we expect the results of this review to start taking shape from the second half of the year. Some payments have been released, and we expect the major chunk of payments to be released shortly also, as this review has been conducted. So hopefully the ambiguity has gone, and we will have a clearer picture in the second half of the year. The tender pipeline has been slow and is expected to pick up post this review. So again, from the second half, there were a lot of work to be done in the Jal Jeevan Mission also and in the urban sector. So we should see a good inquiry pipeline.
So from the execution point of view, how should we see this year as a whole for the project division? Would it be better than last year, this year, or there would be still some sluggishness throughout this year as well?
I think we should be at the same level as last year or a bit improved this year, because as the cash flow situation improves going forward, we are focused on our project execution because we want to complete them contractually and also move into O&M. The challenge remains for newer contracts as the landscape becomes clearer. But for this year, there is no challenge. Okay.
And so second part of the question is on the, we also mentioned that we are looking at some opportunity from the Navy side of the business, on the pumping business. If you can give a broader sense on this, what are the size of the project which we are looking at out, and what would be the typical execution cycle for these projects, and what would be the kind of margin they would enjoy next 3 to 4 years?
The Indian Navy has taken up a large plan to modernize and to a large manufacturing plan for a number of vessels over the next 30 years. So we have been aligning ourselves with the Navy's needs and getting our products approved. And as the vessels are coming into manufacturing, we should see a good amount of business increasing with an increasing trajectory going forward. But what we want to say is that we are increasing our product range, and that will place us well to exploit the opportunity in the sector.
Okay. And just last part of my question is on any update on the South African acquisition. I mean, if you can give a broader sense, what is the currently revenue run rate we should expect from South African acquisition, and what is the order book at this point of time we have, and whether the acquisition process is consolidated, or how should we see entire?
In the presentation, we have now split up into two parts. if you see that we have made it into product division, which has got India, domestic and international. And in that, you will see the Q1 performance was 141 crores revenue in international and 65 crores in domestic. So it's a 2/3, 1/3 ratio. And the order backlog for products was about 1,053 for products. This is again 411 in domestic and 642 international. Similarly, in projects now, we have shown that the revenues for Q1 were 116 crores in domestic and 56.6 crores from international, primarily from South Africa. And the order backlog is 3,200 crores, 2,260 crore is from domestic, and the balance is from international. So you can see that there is a shift towards, we are now in the project business, we are getting to a ratio of about, already this year it was 75%, 25%, 75 domestic, 25% international, and we are targeting to bring this to 60-40. That means domestic 60 and 40% from international. The order book, if you see, is in the similar lines.
Okay. So, and on the annualized basis?
So on an annualized basis, you can assume the same picture. You will, so this is, I think the picture will evolve, but you will see that our revenue this year is 197 crores from overseas and 181 crore from domestic. I think this ratio of 50-50 will be maintained throughout the year. So the jump will happen overseas. Overseas will jump to meet these targets.
And all the consolidation for the acquisition has been already completed in this quarter in South Africa?
Yes, that is the thing. So we had a lot of challenges this quarter because, say, PCI Africa, we consolidated only for 1 month because the transaction completed in May. Similarly, there were some transaction and legacy costs in the Eigenbau, MISA and PCI. So, you know, all are completed now, and now we see good traction going forward for the rest of the year.
Okay, sir. I have more questions. I will come up in the queue. Thank you.
Thank you. Before we proceed with the next question, I would like to remind participants that you may press star and 1 in order to ask a question. The next question is from the line of Ravi Naredi from Naredi Investments. Please proceed.
Thank you, Prakash ji, to give the opportunity to me. This is our top line is same, but bottom line is down heavily in this quarter. So any specific reason? As I joined the call late, so if you already replied, I feel sorry.
So I think there is no reason. I think it is, as we have explained, one of the issues is that the overseas operation is now a significant part of the revenue. For example, it is 197 crores and 181 crores is domestic. The overseas EBITDA for this quarter came down to 11%. Typical is between 16 to 20%. So this has happened because there were some costs in the first quarter and the revenues were not aligned. So as the acquisitions are now consolidated smoothly, we should see this improving, and by the year end we expect to go back to our normalized level, EBITDA levels.
Okay,
so
okay.
I think the margin is just about because of the transaction.
Okay. And sir, due to heavy rains this year in India, how we see pump division in 9 months?
I think as we have mentioned, the product business is very strong. We see very good outlook. The order book being at record levels, and projects, we are really, yes, the rains have affected a bit of construction for us, but we want to see more clarity on these Jal Jeevan and Amrut schemes, which we should see in the second half of the year. So we are very optimistic about the second half of the year.
Okay, okay. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Co. Please proceed.
Namaskar, Prakash ji. Namaskar, Geneva Saab, and thank you for this opportunity. Sir, firstly, if you could, am I audible to you, sir?
Yes, you are audible. Namaskar.
Thank you, sir. Namaskar. Sir, firstly, sir, if you could just give what are our receivables from the Jal Jeevan Mission as on the closing balance of March 25, and as on date, how much is the closing balance, and what quantum of work have we executed for this quarter?
So, we don't have it clearly as far as Jal Jeevan itself is concerned, but we received some funds in the month of July itself. So that is quite very positive, and we see this further traction improving in August and September. So we see a positive movement in the outstanding going down, and we are focused on completion. So our projects are significantly advanced now. We are at most of our older projects are at 60, 70, 80% completion. So we are into completing them and putting them into O&M. But we don't see problems regarding the existing projects, and we see the cash flows are stabilizing in this quarter itself. And we are concerned a bit about the outlook for the sector, the domestic sector. And however, with the policy statements we see, that also should be optimistic in the second half. But as a company, as you can see, we took a very important stand to de-risk ourselves, and we built up a good project business in international project business, which today will be 40% of our project revenues, which will de-risk our business model.
So if I remember correctly, something around 400 to 500 crores were the receivables. Can you give a ballpark number and also the July number, just to understand the gaze of fund release? Because across the board for Jal Jeevan, whether it is EPC players, whether it is product players, everybody are of the same view that funds are being stuck and the receivables are mounting up. So if you could just give some color. And secondly, on this order book position, what is the executable period for the project part, sir? I think so. The closing order book of 2,200, I think so. 3,200 is there, out of which 2,260.
You're right. 2,260 is our domestic business, in which we have approximately 1,700, 1,750 of construction contracts. And the typical time frame would be, so you can see we have still got 2 years order book at a revenue of 800 crores.
Okay. And for the international part, sir?
Payments, we have received payments in April and in July. So our outstanding as a company has come down by say 25%, 25 to 30%. So we are quite positive that this situation will further improve, and we are not as distressed as we were feeling in March.
Okay. And so for the international order book, what is the execution? Executable period on 940 crores?
Approximately you can take that you're looking at, there is a bit slower because the projects are a bit longer, between say 2.5 years. It's about 2.5 year order book, 2.5 to 3 years. But a lot of new contracts are also in the pipeline there. So very, very positive. The international order book gives us great confidence.
Any color on the bid pipeline, sir? You can give on the international.
The international bid pipeline, lot of projects are in LOI stage, which we will be reporting soon. The domestic bid pipeline is quite disturbing.
Yeah. No. Any numbers you can share for international, just to get a gauge where are we present and what is our win ratio?
I think the win ratio is quite high and significant because our companies are very strong in their sectors and in their markets. I think we will come with more clearer definition as the quarters go by. But as of today, you can see that we have 940 crores order book there and a good amount of LOIs, maybe the similar amount of LOIs in the pipeline. So we should see good order booking and revenues down the line.
Sir, a small point on the margin. I think so to the earlier participant, you did mention that going forward, we will be returning to our EBITDA margin, which used to be, I think so, 15 to 18% there should be the number we should look. This quarter was lower at 16%, I think so. No, lower than that. It was slightly lower than that.
So domestic was 15%, 15.1 or I think percent, which should go back because again the first quarter is a bit erratic, and I think we will be in the higher range between 15 to 20 as we normally are. We don't see any concerns on margin. And
on the console part?
7%. Yeah. International fell to 11% because of certain one-off costs, which will get normalized in the balance 3 quarters.
So as a year as a whole, sir, on a consolidated basis, what should be the EBITDA margin for both the divisions taken together? What should be the ballpark number?
Same or improved from previous years.
Okay. And on the incremental volume, sir, what should we anticipate since only we are into 3 months into the year, in fact, 4.5 months into the year, but still on what top line we did last year, what should be the growth should be or the incremental execution scale should be for the current financial year?
We will see a good amount of traction in the international operation. You can take the first quarter as a guideline there.
Both in the product and the project business?
Yeah, the first quarter is a good guideline. We are very happy with the numbers we achieved in the June quarter as far as revenues are concerned, and this should be the guide for the rest of the year.
You are alluding to the product division or the project part, sir, or both? For the international?
Product, project, international, all combined.
Okay. So in nutshell,
international product and project, that revenue has jumped up to 197 from 120. So I think this growth should be maintained throughout the year.
Okay. And lastly, sir, on the NSE listing part, I think so investors and the analyst community were hoping for some traction on the NSE listing of our stock going ahead. So any thought process or are we in the process of doing the necessary to get ourselves listed?
Actually, it wasn't a priority for us. We were really focused on stabilizing and consolidating our business. As the year goes by, we will again look into this. So it's not been a priority for us.
Okay, kindly sir, prioritize it. I think so. The type of investor base and the segment where we are, NSE provides a bigger landscape than BSE, sir. So kindly look into.
My point was that we had quite a concerning period through the last 1 year. So we have been we had a period of change where we were dealing with this Indian project cash flow challenge and growing the international business with, I think, very good acquisitions. So that has taken up some time, and we will now go back to re-looking at this.
2 small points, sir. What is our net cash on the book, sir, currently, or what is the cash and debt number, if you could share?
Can I come back to this point at a later time? I'll just take it out.
Yes, sir. And one more request, sir. Our presentations are uploaded just 15 or 18 minutes before the call commences. So either a call can be shifted by 40-45 minutes so that we can go through the content.
I think we will try to keep it at 5:30 because we are seeing our board meeting is taking a bit longer. So we will keep it at 5:30.
Yes, sir. So many questions, repetitive questions, we can overcome the same, sir.
Thank you for your attention. 5:30 will be better.
Yes, sir. Okay, sir. I'll join the queue for my follow-up, and I hope that we gain traction. But sir, Q2 will be, I think so, on the execution scale, would be lower because of the monsoon impact, or the catch-up would be there from the international order book execution?
I think that's the thing. We will see traction. The international traction will pick up. You know, as I mentioned, we just have 1 month performance from PCI Africa, which is a very significant contributor to our revenues. And same with all our international businesses. They pick up in the second half of the year. So our second and third quarter is their peak period. Especially the December quarter is very peak for them.
Okay. So the contribution would be much higher than what it has been. Oh, okay, sir. I'll just wait for that debt and cash number, and I'll join the queue again, sir. Thank you, sir.
Thank you.
Thank you. Before we proceed with the next question, I would like to remind participants that you may press star and one in order to ask a question. The next question is from the line of Vineet Lambu from HSBC Asset Management. Please proceed.
Sir, hello. Can you hear me?
Yes, please. I can hear you.
So, out of this 2,200 crores, what would be the O&M order book, sir?
About 530, I think.
530. So, in fact, we haven't won any orders this quarter, right?
So we've got some amendments, but no order wins for quite some time now.
Okay. And about the receivables, I don't know. I have heard the number. If you have any number as of quarter one.
Receivables are improving. It had peaked in March, and we received payments in April, May, June, July, and so by July we are in a better position. By 25-30% it has gone down.
Okay.
So I see the
further it is expected to improve in August.
Yes, of course.
So right now, the only problem is from the project win perspective. This is mainly because of the government.
I see that. So this should also help our interest cost to reduce going forward, which has affected our PAT. And only problem is that though we are optimistic, because this being a policy issue, when the projects are restarted, they will be done with a bang. So we hopefully will be able to rebuild our order book in the second half.
The other thing is these other expenses have increased by 30 to 40%, in the range of 30 to 40%. This is mainly because of the one-off cost in the international acquisition.
Yes, we have. You see, the international acquisitions have taken place. Their cost structure has merged with us, but the revenues will. Our businesses are quite cyclical. So it's a year is a better way to look at it, because most are project revenues. So you will see it as a year. It will be the margins will improve and normalize.
So it will take another 1-2 quarters, or from second quarter this margin?
It will start from second quarter. The first quarter, as I mentioned, only 1 month we got, because of the acquisition.
Okay. Got it. So this 11% of the international margins would go back to 15%.
Yeah, that will improve.
Margins will not be a problem. Quarter two, as usual, because of the rains and all, would be a dull quarter, right?
So, as the international segment will be strong, no? They are not affected by rains.
I will fall back in the queue.
Thank you. The next question is from the line of Deepak Pulswani from Swan Investments. Please proceed. I would request Mr. Deepak to unmute themselves and then speak.
Yeah. Thank you for the follow-up opportunity, sir. Sir, wanted to seek little more clarity on the international project part of the business. If you can give some little more clarity on all three acquisition, what was their annual revenue, at least for the last fiscal year? For example, PCI Africa, what was the last year's CY numbers or FY number? and Misa Italy and Iganba acquisition, what was the annual revenue? And how should we see the consolidation in this year? Probably PCA Africa would be getting consolidated only for the 10 months, right?
Yes.
And the rest of the remaining 2 acquisition would be for the 12 months.
Full year for the 12 months.
Okay. So can you please give the entity-wise revenues for last fiscal year?
Approximate revenues I had indicated in my previous investor presentation. If you take it out, you can see it. I don't have it with me now, but in March I had indicated approximately, I think, 400 crores, something like that.
Okay. Okay. And on the margin profile front for this project part of the business, in the international division, we expect that will also come back to the India part of the business, that would be close to the 15 to 20% kind of range, which we have been maintaining.
Yes, absolutely.
Okay. And sir, what was the one-off cost for this quarter? What was the amount?
Sorry?
This quarter, there was some one-off cost related to acquisition. What was the amount?
No, it's different types of. One is say currency loss, which is an M2M transaction. Some are some legacy contract which we had in the company, like Misa, which we had to bear. So it's difficult to do, but you can assume that has affected this margin, which is at a lower level right now.
Okay. And then, sir, finally, on the project part of the business, last year in the domestic side, we did somewhere close to 860 odd crores. This year, roughly 900 odd crore and then 400 crore kind of this international part of the business. Would that be the fair assessment in terms of the revenue for FY26?
I don't want to give that figure. What I want to say is that the overseas business, as you can see this quarter, it has jumped from 120 to nearly 200 crores. This gives a good outline that the overseas will now be about 50% of our business. The domestic business, as I mentioned, the product is very strong and should keep up the growth. And the project, we are confident of completing the contracts. However, it is subject to the scenario. We are optimistic, but it is still subject to the scenario.
Okay. And sir, on the product side of the business, how should we see the growth trajectory in each domestic and international business? If you can give broader color or sense for that kind of business as well, please.
So I think the product side is very strong, and the international project side is very strong. The product domestic has been a very surprising up move, which we are seeing now. It started off last year and it's continuing. So very, very pleased with that. And the international business, as we have mentioned, also is now, the Middle East, North Africa region is supporting us. South Africa is supporting us. So very positive outlook. And we have shown by the project order backlog internationally, that is also looking very positive.
Okay. And sir, final part of my question is on the pipeline of acquisition. Is there any further acquisition we are exploring, or at this point of time we are done and then would be looking at first place for consolidation of these acquisition and then would probably explore more? If you can give the broader sense on that pipeline.
Yeah, we are looking at further opportunities for acquisition because we feel we have consolidated this well. And we as a company are very satisfied with our acquisition process and consolidation process. And they have been relatively smooth. And we still have considerable funds available after the Ruchi transaction. So I think it's just opportunities. We are very selective because we are looking at opportunities which have long-term profitability, good valuation, and which are where we can add value by using synergies.
Okay. And sir, any thoughts on increasing the stake in some of the existing international subsidiaries where we have somewhere close to 50, in some of the acquisition, 54 to 63% stake? Are we looking to make it wholly owned subsidiary at some point of time, or how should we see as an investor?
It's a capital usage which we have to consider. We basically we have a 60-40 ratio in Singapore with the promoter company. Now, whether that is an efficient use of capital, we have to review. Today, our priorities are on growing the business because we sold one business and we generated significant cash and we want to deploy it to grow the business.
Okay. Thank you, sir. Thanks a lot and wish you all the best.
Thank you. Before we proceed with the next question, a reminder to the participants that you may press star and 1 in order to ask a question. The next question is from the line of Devyash Jain, an individual investor. Please proceed.
Hello, sir. Am I audible?
Yes, you are audible.
Yes, sir. The first question is, the Q1 presentation highlighted several global mega trends. Example, the LNG plant build-out, MENA infrastructure boom. So how is WPIL tailoring its R&D roadmap and product development priorities to capture these thematic opportunities? And what new offerings can we expect by Q3 FY26?
Sorry, I didn't understand your question. Please, can you repeat?
So the Q1 presentation highlighted several global mega trends like the LNG plant build-out, MENA infrastructure boom. So how is WPIL tailoring its R&D roadmap and product development priorities to capture these opportunities?
WPIL has a very strong R&D and product development which is supported by our European operations. And, we work on our own targets, which are primarily, like right now, we are focused on naval development. Sorry, your background, please.
Sorry, one second.
Can you mute? Can you hearing?
Yes.
Yeah. Now, so we are focused on the naval product development, which is our focus area for us. We are focused on the drainage product development, which is another area which we see sewage and drainage and navy. These are the three segments we are presently focused on. And our focus keeps going as per client requirements. We are product leaders in our segments.
Okay, sir. So, secondly, WPIL's consolidated working capital days have trended upward over the past 2 years. So, what specific initiatives such as supplier financing, digital invoicing, or contract structuring changes are you deploying to optimize receivables and payable cycles?
So, we have got a significant of debtor pile up with the Jal Jeevan Mission, which is now reducing over the last 3 months, and we expect it to completely normalize in the next 3 months. So we don't see any major challenge.
Okay, sir.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Co. Please proceed.
Sir, firstly, if you have the number with you in terms of the cash and the net, the cash and the debt number. And so secondly, you mentioned about our international acquisition of that African acquisition, because of which the legacy cost has been booked and the turnover is not commensurate to the same. This is what the understanding is to be taken.
Yes, we have said that there are certain, you see the turnover is 197 crore is for 1 quarter and the EBITDA is 21.7 crores. So there are some legacy costs and some exchange losses which you can see there. These have affected the first quarter, and within the balance 3 quarters it will normalize to the normal range, which is high end of 15 to 20.
And these numbers are booked in the P&L in the other expenses and the employee benefit expenses, or where should we look at for these numbers? The other expenses is not commensurate to the revenue.
The administration, we have got, suppose one is we have some administration costs and certain costs in sales, like some contracts which have had losses in the old contracts which we took over. Then there are the personal and administrative costs are not commensurate because the revenues have not been fully, reflected, which will be reflected in the going forward. So I think you have to be patient and wait for the next 3 quarters.
So we got your point very clear, but what all we people are looking is, if you can give us a number so that we can just model it out as a one-off number for the first quarter. Yeah.
No, I don't have the number. I would say that it is affected. EBITDA levels are affected because all heads are affected marginally, and they are. So it is looking that it was lower, and it will normalize because our normal levels are higher. Our business levels are higher. And actually, our international acquisitions are higher margin than our domestic. So you will see the benefit you will see the effect. You can imagine this is the first quarter where all 3 businesses have been consolidated. So it is quite remarkable that, we could buy these businesses starting from last year, I think October, November, and in 6-8 months we have bought the businesses, consolidated them, and stabilized them.
Yes, sir. Your point is very well taken, but we people were only looking for just the one-off number. Okay, we don't have them, but that would have sufficed a lot of the margin compression for us, sir. That was the only reason why every one of us is just looking for that part. So any ballpark number would have helped us in getting sense of what led to that lowering of the profitability. So secondly, the thought process on the cash and the debt number, if you can share.
Roughly about 200 crores net cash is there in the books, and I think this was as of June, and further as we have received outstanding, as I said, on Jal Jeevan, significant amount, so it is further improving, and you will see it quite significantly improved by September.
Okay. And sir, how much have you spent on these international acquisitions of the 3 of them in total?
Roughly about 100 crores.
Roughly? How much, sir?
100 crores.
100 crores we have spent on the total acquisition, sir. That is our cost of...
Yeah, approximately.
I think, sir, I'm getting the numbers wrong. This African acquisition and all, everything put together is only what, 100 crore?
Yes.
Okay. And the asset size of this business which we have acquired by this payments in terms of the infrastructure and the assets under these companies, how much, what should be the balance sheet size?
We don't have it with us. You will see it in the next quarter when we give the balance sheet.
Okay, sir. So to take home the point is that it should normalize for the international business going ahead in the second quarter itself, and margins will also take an uptick. For the domestic operations, we need to wait for how the government ramps up again the Jal Jeevan scheme with the type of deliberations that are going on. This should be a good understanding to take home, sir.
Yeah, the product segment of the domestic operations is very strong. The project business is stable in line with last year, but further improvement and further visibility down the line we should see in the second half. The international business, as the acquisitions have shown up to some extent here, the margins will also show up in line with our general trend, because that is our targets on those businesses are higher, much higher. So they will show up in the coming quarters as the businesses play out. And as we are generally buying businesses at very good valuation, so that is that is our main focus. We will not overpay.
Right, sir. So all the best to the entire team, and
Thank you.
hope to hear much from you people again, sir. Thank you, sir. Namaskar, sir.
Thank you.
Thank you. A reminder to the participants that you may press star and one in order to ask a question. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
So, thank you all for participating in this earnings conference call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relation manager at Valorium Advisors. Thank you and good evening.
Thank you. On behalf of Arihant Capital Markets Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming con calls.